All right, guys. Well, I guess we'll go ahead and jump in. I appreciate you joining our afternoon webinar on this April the 17th on whatever day we're in still of our community quarantine or stay at home, whatever you want to call it, as we're all social distancing and doing all those great things. As we open up and jump into this webinar, let me first kind of tell you how things will work. The first way that we'll jump into the material is we'll keep everyone muted while we're presenting. We're going to go over a resource packet that we have prepared that you'll also get a version of after this call as a follow-up. And then, we'll get to a certain point if we've gone through the material that will allow everyone to unmute. And then at that point, we'll open it up for questions. And so please, as you kind of hear the material, any big questions that you had, write them down, save those, and then we'll give you instructions at that point on how to unmute yourself. Hopefully, we're probably all experts on Zoom by this point. I don't know about the rest of you guys out there in the audience, but I've had more Zoom meetings since all this started than probably the several months before that, right? So we'll tell you about that, but you click on the microphone in the bottom left, or if you're on the phone, you'll hit *6 at that point once we give you the instructions that we're ready for question and answers, and that'll unmute you. Quick little introduction into who we are. So this is Diamond Client Group. In case you're, those of us who are joining as clients, we appreciate your attendance. And those who were referred to this webinar as a resource from someone else who'd already seen it, or from one of our clients, we appreciate you joining us. We're a small boutique financial planning firm that has a large focus with business owners and the high net worth. And so as such, we got a ton of questions when all this was first kind of unfolding from our clients around, how does the stimulus work? What do I need to be doing? Can you help us with it? And so we put together immediately a resource guide, and then, decided we ought to do these Q&As just to give everyone kind of a little bit better insight into, answer specific questions that you had. What you're seeing kind of being scrolled in front of you, Brian is kind of running our call technically today from a technical aspect, and he is moving forward an intro packet that we send folks just around what it is that we do to help people, especially businesses. And so there's 4 areas that we help folks with, and that's tax reduction, structure, and leverage. So how they should be organized from an entity standpoint, and how do they leverage assets that they already have, all that kind of good stuff. Then how they incentivize their employee pool. We do a lot of interesting work in the 409A space, which is deferred compensation instead of the traditional retirement plan routes, which we can also do. And then ultimately we do a lot of transition work. So succession planning, selling it internally to employees, externally to a third party, or internally to family members, all that kind of good stuff. So that's a quick little introduction to us. I think at this point, Brian, we'll go ahead and switch over. We'll maybe do that slide at the very end. But we'll switch into the stimulus package resource guide that we have. And just jump up to the top. Again, this document you're going to receive after this call today, along with a recording. So we record this, and you'll have the recording as well in the follow-up email we send to all those who registered. So you can listen back to anything that maybe I went over a little too quickly. You can hear it again, and you'll have the document to refer to. I like pointing out a couple of things about the document itself. You'll notice as you click on some of the links and all that kind of good stuff, we use a lot of government links. That's purposeful. There are a ton of resources, a ton of articles out there, a lot of which are from news sources. And what we found, especially early on as the different phases of this were unleashed, that there's a lot of misinformation that gets out there unintentionally, where additional guidance has been given that's corrected things. And so if you had a news article that then another news entity, kind of copied what they had to say, and I'll point out some of those mistakes or misinformation that a lot of people think is true that just aren't as we go through the document. But you'll notice all of our resources are government sources, so that they're from the direct source and from the actual guidance that the Treasury Department and SBA is providing, with two exceptions. One is U.S. Chamber of Commerce, which is really a good third-party organization that gives support to local Chamber of Commerces. And so they've done a really good job of providing some graphics and some easy to understand things. So we went ahead and decided to include them as a source. And then there's one little graphic that we use that ADP actually created on what the choice is between some of the business assistant programs. And I'll reference that when we get to it. But other than that, all the other links are government in nature. And that's a good thing. So the document is full of those links, and it'll take you directly to great information that you need. Okay, all that said, I'm going to go ahead and just jump in. We're going to go through each of these phases relatively quickly because I like to leave lots of room for the Q&A. But phase one was the first part of the stimulus act and, of the CARES Act. And so that was on March 6th. It really had to do with the EIDL loans, or EIDL, Economic Injury Disaster Loans. These are real loans, not that the other ones aren't, but the PPP is meant to be a forgivable loan, and that's the one that everyone's heard the most information on. But the EIDL was the first loans that came out. It's a true interest rate. It's very low, around 4%, up to a 30-year repayment, $2 million limit. And so it's still they've currently closed the EIDLs and PPPs. We do expect that to be reopened. Actually, I've been trying to check the news throughout the day. I haven't checked it again in the last couple of hours. So maybe somebody will tell me later that the Congress made an announcement. I didn't get a chance. I went back to back with the last few hours with meetings. So if they made an announcement, that'd be great. But so far, as of this morning at least, the programs were closed, waiting on additional funding, which they're trying to get. There's an advance provision within this of up to $10,000 that actually came later. That came in the third phase. We mention it now because it has to do with this program where you can get up to $10,000. There's some recent guidance that the SBA provided that made that tied to employee headcount at $1,000 per employee that you have on the payroll, up to the maximum of $10,000. When it was first announced, that wasn't the case, and so people were getting $10,000 advances regardless of employee numbers. It was really more to make the funds stretch a little further, that the SBA provided that additional guidance per headcount on the advances. The advances are forgivable, so that 10 grand specifically of the EIDLs does not necessarily need to be repaid. Just know that if you've heard that was forgivable, it's just the advance, not the rest of the loan. Okay, let's go ahead and move forward, Brian, to the second phase of the act. So phase two, I always spend a little bit extra time on just because people know the least about it. So this is sick leave or employee leave. This is meant to provide a way for people who are stuck at home without wages to continue to earn compensation, is what it was meant to deal with. So the first part of this was folks who are directly sick with the virus, or they're caring for someone who is sick with the virus, or they're quarantined. Quarantine does not mean the stay-at-home orders. That doesn't count. Quarantine is a medical quarantine. If you fall into any one of those three, or really if you're a business owner and your employees fall in either of those three, you receive full compensation up to a maximum of like $550 per day, which is a pretty hefty maximum if you think about what that equates to. That's meant to cover a good amount of wages for folks, and it's fully reimbursable through a tax credit. We'll talk about here in a second for the business owner. So you're not paying them for these 2 weeks. It's for 2 full weeks or 10 days, 10 business days, 2 weeks. And then the second part of the leave is for people who need off for an extended period of time because of illness, so not just the 2 weeks, so they're sick for longer, or, and the biggest thing that brings everyone in that that a lot of people get a lot of questions on, is if schools are closed or daycares are closed, so here in Texas, schools closed to the remaining part of the school year. They just made that announcement today. So all of Texas, there is no school through the end of the year. So parents are at home, and if you're the primary caregiver for the kiddos that needs to stay home, you can request off from your employer, and you will receive at least 2/3 of what your compensation was, up to a maximum of $200 per day. Again, that's paid really through the government, and it's the business owner is the conduit. So the business makes the payment, and you're forced to make the payment. That's part of the act. You have to pay them. And then you are reimbursed through the government through tax credit. So let's scroll down, Brian, just through the tax credit and explain that a little bit. So the tax credit is against payroll tax. So this isn't against your federal income tax. It's against your payroll tax. So, not everybody really understands payroll tax, especially if you're using a payroll processor. Like if I use ADP or Paychex or any of the big payroll processors, they're escrowing those funds for me out of every single check. And then they make the payment quarterly at the due date. We're coming up on the first quarter due date for payroll tax, which is April 30th. And so when we go to make that payment, we've been paying our employees for now, 3.5 months. So there's some built up tax that's in an account that if we had someone that requested leave and we paid them, I would get a dollar for dollar reduction against my payroll tax obligation. You say, well, Luke, I've had all these people stay home from school and I went ahead and paid them. Are you telling me that I could get reimbursed? What if I only had, let's say I have $10,000 sitting there as a payroll tax obligation and I paid out $15,000? Well, you can actually request for the excess. So if the tax that you owe doesn't cover it, you can request money from the IRS and Treasury Department, and they will send you a check. It's supposedly going to come within 2 to 3 weeks after the request. We're just going to see the first of those requests right after the 30th, after the payroll tax obligation. So, we shall see. But that's the intention of the rule. Just for some specifics on this, which, by the way, this whole section has some great links to the Department of Labor, gives really good guidance that will answer more, any of the kind of interesting questions that you may have around, well, I was a retail store, we closed, but I've got kids at home. Do I still get reimbursed for paying them? No, if you didn't have work for them to do. Well, Luke, I did have work for them to do. I could have had them, working on inventory, cleaning up the store, doing those kinds of things, getting my website up and running. Well, that's different. If you offered them work and they requested leave because they need to help the kids with schoolwork and all that kind of good stuff, then they do qualify. So just understand some of those little, you have to have an offer of work and they requested leave, and they have to fit into those criteria for requesting the leave. Then it's a reimbursable credit. All right, let's go ahead and move on from that one. Phase 3 is the big phase. That's what gets the most attention. It's where most of the dollars were put, was into phase 3. So this first little section is just the recovery rebates. Those checks, the Trump checks as they're calling, since his name's on them, are being paid out. Most people, if it was electronic, they already received it. If it was a paper check, most of those, they're being received this week. There was a weird little, I'll go ahead and mention there was a weird little glitch in the system. If you went through and filed your taxes with one of the big firms like an H&R Block, those kind of things, it's possible that your check kind of got lost because they set up these temporary accounts when they file for you and you pay in, or that a refund comes in before they give it to you. And so some of those checks, and they expect that affected several million Americans got affected by that, but it's just going to be a couple of weeks behind, and there is a site that you can go to check that out. The next section where it says Pandemic Assistance Program, that is for unemployment. And it's important to note here, which actually this was also true with the sick leave, that self-employed folks qualify for this. And that's interesting only in that unemployment paid through the state, self-employed persons do not qualify for because they don't pay into the unemployment system. However, for the federal support, for the $600 a week, you do qualify for that. So if you file for unemployment through the state, you won't receive the state support, but you'll still receive the $600 a week even if you were self-employed. So a lot of people didn't realize that. Like mentioning it here just so you people know about it. Then we get to the bigger pieces, which has to do with the SBA. So the first thing I'll point out here before we get into the details of the PPP, the Paycheck Protection Program, there's a choice. And most business owners that I've talked to didn't realize there was a choice of programs. So you have to make a choice between the PPP and the ERC, or Employee Retention Credit. So you say, Luke, my goodness, all I've heard about was the PPP. What in the world is this ERC? So the ERC is a payroll tax credit of 50%. The PPP is loan forgiveness for payroll, full payroll, not payroll tax, the full payroll for 8 weeks. However, the ERC credit could last through the end of the year. So instead of being 2 months, you could get 8 months of support through ERC, but that's only a 50% reduction against payroll tax. So that's where you have to kind of do a calculation. If I've got a lot of employees and I run it both ways, I might find that my ERC potential credit is significantly higher. A lot of retail organizations are in that boat where their ERC credit would be significantly higher. The only issue there is that you have to ask yourself is the test is my gross revenue over a quarter, once it exceeds 80% of the previous period from the year before, I don't qualify for the next quarter. Well, we're all in the second quarter right now. Chances are we're not going to be at that 80% level by the time we end this quarter. So that means we would all still get the benefit of the third quarter. And then it becomes, you just have to ask, it's a question. I don't know. Will we be at 100% in the third quarter? Some businesses may feel like they will be, like they'll have some pin-up inventory and things to do with clients. Some businesses are a slow burn, and so having a 3-month interruption like we're having may create a lag effect for the preceding 6 months that'll follow, and so they may feel like the ERC is a better route for them to go. So let's actually scroll down, Brian, and show the little chart that ADP has at the end of this section, and then we'll go back to the PPP. So this chart is really good. It's one of the only ones I've seen like it. That's why we go ahead and include it. Again, ADP came up with this, but it's just a quick little reference chart for which ones go with which ones, right? So it gives the section number for each of the provisions within phase 3, and so, or in the entire stimulus package. So if I pay out sick leave, well, I can do all of the other programs. I just can't use the same wages. So the sick leave that I got, reimbursement for, I can't double dip for the PPP, and I can't double dip for ERC or anything else, right? However, if I do the Paycheck Protection Program, that second one, then I cannot, you see where it's a no, I can't do the ERC program, and I also can't defer the employer portion of Social Security tax. That's the one where I saw a lot of news stations got this wrong. I actually don't even know who did it first because I think everybody else just copied the information. It even made it into a couple of really respected organizations on their organizational material that said, hey, here's the first 3 things you should do as a business: apply for the PPP and don't pay your Social Security tax. Well, that's not true. If you apply for the PPP, you have to pay your employer payroll taxes. So just know that it's a choice on these. So with the ERC, you do get to still defer wages. You just can't do it for the same wages once you get to that final what's owed. All right, so let's scroll back up to the PPP and talk about that a little bit more. So, first and foremost, as of right now, again, unless, Congress has acted in the last few hours while I've been busy, the Paycheck Protection Program is out of money. Both sides, Democrats and Republicans, are all saying they want to refund, to fill it back up, and that they're going to. But until they do, the SBA cannot accept additional applications, which is why, so the program has been shut down because it's full. $350 billion has already been allocated. There's some debate on whether it's really all going to have been spent, because they think that there's some duplication where people applied through a couple of different banks when they were having trouble with their big banks, and then they applied through some smaller banks. And so there might be some duplication of applications, that by the time this whole thing shakes out, that there may be some extra money in there. They don't know until they wade through the actual applications if that's true or not, but there's some thought that that's true, that there might actually still be some money available. And then the extra part that I just like explaining to people is I don't think many business owners really understand, well, why did it, my goodness, it was the first day you could apply was April 3rd. Basically a weekend, people who applied as of the 10th, a lot of them, their applications didn't get funded. So how did this run out within a week? Well, this is meant for small businesses. However, the way the language was written was that you could apply even if you had more than 500 employees, as long as your net worth was less than 15 million. Well, net worth is an interesting number, right? There's some really large companies that you could make justification that they're running at a negative, especially right now with their book values being depressed in the midst of all of this, and the assets that they have or mortgages that they owe on, all those kinds of things. So how they're valued might be negative. And so you had some very large tickets written early on with the PPP program for huge companies that applied. That's part of what is being debated on, kind of closing that a little bit and really making sure that the money is going to small businesses for the second $250 billion. But the additional thought is, hey, most of the big companies are out of the way, so it might go a little bit further. However, 1099 folks, the first day that they could apply was this past Friday, which was, gosh, what day was that? The 13th? Is that right? Or no, the 10th, sorry. So a week ago was the 10th. So the 10th was the first day that they could apply, and yet, the money ran out, by basically on Tuesday the 14th, and that might have been the first day that banks even let them do it because they were still processing business applications. So in this first go around, all 1099 independent folks kind of got left out of the mix. There was no way that they could apply. This second go around, it's hard to know how many applications will be received and what the total would be of what the need is there, including all those workers. But what both sides again are saying is, hey, the high utilization shows this is working, getting money out to the people that need it. Because there's a headcount obligation, people are getting rehired. And so this is a good thing. Let's refill it. We'll see if they get it done. You stopped sharing, I think, Brian, but we still have one more section to go through and go through the retirement program that's after this section. Okay, here we go. Oh no, he was pulling up the no, you can leave it on that one, Brian. That's fine. If you got the guidance up, go back up.
Hey, Luke, I was going to scroll to the area about the forgiveness and headcount specifically.
Yeah, you had it. It's right there. Yep. So on your, nope, you're moving again. And just leave it right there. So on the forgiveness and what he was going to show, what it was talking about there is there's two big tests to forgiveness. The first is you've got a headcount issue. So you see where it says number of staff, if that decreases, and by the way, this document that he has is directly from the Treasury Department. So if your headcount decreases, then you're going to, the amount of forgiveness will reduce. And then the second is that 75% of the loan has to be used for payroll purposes. And that's where they're saying it in reverse, right? That 25% can be used for other things. So you can, so if these companies, or if you let some people go or furlough some folks, you say, man, I want the full forgiveness. How do I come back into the good graces? Well, you can bring them back, and you don't have to bring back the same people, by the way. It's a head count number, so you can hire other people, and that's fine. Then you see the dates on there, or when you can make those changes between, and as long as on June 30th, so if you fired them before April 26th, and you bring them back by June 30th, then you're okay, because your head count total is correct at that point. Now, the real good guidance for what documentation are we going to need for forgiveness and to prove head counts and all that kind of good stuff hasn't completely come out. It's definitely going to have to do with our, payroll tax forms, just like it was the first go around, on seeing what that looks like for the second quarter. But we'll get into that probably a little bit more with the question and answer portion. So why don't you, Brian, just reshare the stimulus package resource guide that we have. We'll go to the retirement section, and then we'll open it up for a question and answer. So this last section that I guess there's technically two sections left. One is, I think we go through Harris County in there. So go ahead and scroll. Yep. So all the counties. And so we've got a couple of locations in the Houston area. We may have some folks joining us from out of state. Still think this is valuable to talk about, as there's a lot of counties that are doing, and states that are doing additional programs, for businesses on their own outside of what the federal government is doing. And so Harris County is an example of that. A lot of our clients are in Harris County. They have a $25,000 forgivable loan program as well that you can apply for. It's really meant to be meant for businesses who are non-essential and were forced to close. So restaurants, nail salons, those kinds of folks, they even give those examples on their loan application in their website. But you have to operate within Harris County, all that kind of good stuff. You can see some of the eligibility on the form. Really, we're mentioning it here just because a lot of the different counties and states are doing similar type of programs, trying to get money to whatever industry they feel like in their areas are most affected. So let's go ahead and scroll down, Brian, to the retirement section. This really affects all individuals, but it's a special consideration, I think, just for business owners on why we spend some time on it. Our retirement accounts, traditionally, if you access those dollars before 59 and a half, you pay full taxes on the money, but you also pay a 10% penalty. And the 10% penalty is assessed first. So it's a pretty big, double whammy, where most of the time you're looking at, 50% plus of the money is going to tax when you take a full distribution, that doesn't meet one of the exemption tests. So in the year 2020, they're allowing you to take up to $100,000 and only pay the tax. You don't have to pay that 10% penalty. This is interesting. Some people love this benefit and are applauding it because, hey, this makes it to where in a year that you may have a lower income, you can take access funds that will be taxable, yes, but it was a year you probably had lower income anyway, and you're avoiding the penalty, so there's a great benefit to folks. There's some others that say, hey, this is maybe not a good thing because people are going to liquidate some dollars that were inside of the market, which is already depressed. So that's a double whammy to them anyway. Really and truly, it's at least it's access if you need it. You can treat it as a loan and pay it back within 3 years and not pay any tax. The nice benefit of that is some of the retirement plan managers have loan programs against assets because employees can access up to $50,000. And so if you can go through, some of them are creating specialty loan programs where you're not having to liquidate the funds for that $100,000. And so if that's the case, that makes it that's a neat benefit to where you're not taking the bath by liquidating your stocks, but at the same time you have access to the funds without penalty. So if this would be a good benefit for you. You can see some of the information there and links to additional information. So the RMDs it affects the other end of the retirement spectrum, which is folks that are above 70. So there is no RMD requirement for 2020, and specifically for the same reason that we talked about. If you don't have to take an RMD, it's a good thing that you're not forced into doing so. Required minimum distributions, or you're not forced to a distribution in a year where the market is down. That's the intention behind it. So little additional benefit there. If you keep scrolling down, Brian, we've just got some additional resources there I like pointing out, especially the Department of Labor resources are really good for how this affects your employees. There's actually a poster that was mandated in the law that we all, as business owners, were supposed to post and get out to employees. Most people don't even know about it, but there's a link to it within that section of down at the bottom, so you can get that information out to them on your behalf. So that's the document. So with that, we'll scroll back to the top, and I guess, Brian, if you'll put that PowerPoint on that shows people again how to unmute, we'll turn that capability on for you, and you'll be able to grab that microphone in the bottom left-hand corner, or on your phone, you'll be able to hit *6. Just give it a second because Brian has to turn the feature on, and then I'll be quiet and we'll get some great question and answers going. Brian, if you don't mind putting the instructions on the screen, you still got the stimulus package up there for how to unmute. If no one wants a question, then you're going to get some crazy singing or my attempt at doing the do from Alex Trebek, and nobody wants that. So it'll just be better for everybody if we ask some questions and I can stick to the details of stuff.
So Luke, I have a question.
Sure.
So I know that a lot of my people that I've been talking to have had questions around getting some of their salary reimbursed, and where they go and how long that's taking, and they seem to be getting different answers. Is there a simpler answer on how to get that done and how long it'll take reimbursed?
Well, when you say getting their salary reimbursed, do you mean through the PPP program, or do you mean through sick leave program?
Through the PPP program.
So through the PPP, if you haven't already made your application, it's full. So there's no additional dollars until they open it back up. I saw there's actually a great resource called, I think it was COVID Tracker or something like that, or COVID Loan Tracker. Maybe we'll send this out, Brian, and put it on the next version of this, because I just saw this yesterday for the first time. But it's tracking loans that have been applied for through the SBA and how much has been paid out on average, what states are getting good retention. Texas is actually, as of Wednesday of this week, I think was the last time I looked at it, the data, we had one of the highest implementation rates of applications and people getting money, which is a good thing. But the average time, or the delay from the loan being accepted to payment, was 8 days through the program. So for folks who do have an SBA number, that's really the point at which you could consider yourself, the dollars were allocated to you. Because I did have some folks that, hey, I have a number, but I haven't received the funds yet, and I heard they're out of money. Am I not getting paid? If you received the SBA number, not the reference number from the bank, within their system, but a true SBA number, then funds are allocated to you and you should be getting paid. Again, somewhere around that 8-day mark is what the average is. So it may be 10 days, 7 days, something like that. It depends on, it seems like the regional banks are having good experience at getting the money a little bit faster than the big boys. But that's, we all we can go by for that is all the different experience I hear from the clients on actually receiving funds. Chase has definitely paid out. A lot of the regionals have paid out. That's been the biggest success story. The non-banks or the technical finance companies really came to the game a little bit late, but they got a lot of loans processed once they were there. So I hadn't heard anyone who was paid yet, but I had a lot of clients who got an SBA number through the non-bank resources that the SBA opened it up to, almost, a few days into the program.
Okay, thanks a lot.
Sure. What other questions do y'all have? I'll tell you a couple of other questions that we've gotten. So I've gotten on the last couple of calls a question about the forgiveness and how that's going to work. Well, so there's not just been a tremendous amount of guidance yet from SBA and the Treasury Department around forgiveness. But for what is anticipated is, because you have to prove that the money was spent, is that if you keep receipts and you just really do a good job of documenting those criteria, which is payroll is 75%, but you can also have the other 25 go towards rent, utility costs, interest on debt, interest, not principal, interest on debt, and then benefits, which is some people lump into the payroll. Those are all acceptable areas that you can allocate the dollars towards and still be received forgiveness. So it's proof of funds going in those directions. So receipts, invoices, your payroll forms that we file, we get at the end of the year a 940. If you're a direct payroll processor, or if you're directly processing your payroll, if you do it through a PEO, you get a 941 form. And if you're going through a shared service, so like maybe you're part of a big realty group and you have some staff, this was the example we had the other day, you have some staff on your own, but you actually do that through the larger organization. They hold the staff and pay them to the W-2. You're still responsible for their payroll. You can apply on their behalf for the PPP because you're ultimately responsible for paying for it. And then you just need a receipt from the governing organization for the fact that you paid them, right? Reimbursed for the payroll. Everybody's doing that a little bit differently, but as long as you got their tax ID, your tax ID, all that kind of good stuff, that seems to be what the banks and then ultimately what the guidance is tending to recommend as we receive more and more.
Hi, this is Alexandria. I do have some questions for you, and I will probably email you with some more questions. But I was one of those people, I think, that was with a couple million that, there was some glitches with the stimulus package, although I did have Chase Bank. But, I have a couple of things. I'm disabled, so I did see that they're going to be sending out those, I guess either next week or in a couple of weeks. So I don't know if that's going to happen, but did you see anything of like when, I guess, the people are going to receive their stimulus packages that had the glitches? Or, I guess what's going to happen with that?
Yeah. So, Brian, and maybe you even want to jump on and answer this. I know you researched this because it happened to you, but from what happened there is that actually was sent but to these temporary accounts of the big tax processors. So the H&R Blocks, the QuickBooks, the Intuit, these groups that are processing taxes, it got sent there. And so they have to, realize that that's what happened, pull the money back, and then send it directly to you. There is a website, maybe Brian can mention this, that you can go to make sure they have your correct banking information if you were an electronic filer. And if you were a paper filer, if you're expecting a hard check, those should be being mailed out now, to where most, they're expecting them to be coming within the next 2 weeks for most people to have the paper checks. It's the electronic folks that had the glitch if you went through a large process of returns. Brian, would you add anything to that? Because I know that happened to you.
Just that I used TurboTax in the past, which is an Intuit program, and I've experienced that issue. I have not really found much resolve on that. I think this was realized as a problem this week or last, so it's a new issue. I went to the irs.gov website, tried to give them my information, but it seems like didn't have much luck with that either. But what I did was went ahead and filed my 2019 taxes, just made sure that the IRS has all of my information, and I'm just waiting, playing the same game as you probably.
Did you notice an issue with your 2018 taxes as well?
No, I didn't experience any problem with my taxes in the past. I just assumed this time around that they have my info, and I was expecting my check like you.
Okay. And then I also had another question. I just found out, I guess 2 days ago, that I qualify as a 1099 for unemployment, which was kind of a shock. That's kind of a new thing with this whole situation. Do I just go to the normal, I guess, Workforce Commission to apply for that? Do y'all know, is that something that y'all are well advised in, or?
Yeah, you actually do it exactly like you're saying. You go through the state unemployment resources. And so the states are being used as the conduit, because it's actually federal money, that $600 a week. You won't receive any additional on top of that as a 1099 person, because you don't pay into the system for the state. But that's still the same conduit that you use to receive the $600 as you apply there through the unemployment office.
Okay, even though like I received a I don't know, a paycheck every month or whatever.
If you received a paycheck, then you're not unemployed. So I guess it's, it depends on the definition of unemployed, right? So if you're still receiving checks, you're still receiving compensation, the program that really would be best suited for you is the PPP program.
I mean, I guess I'm technically furloughed is what we're doing. We're a very small company. I mean, it's just me and the owner that runs the company. So we're seeing how long this thing goes on, to see if our company can survive it. So
yeah, and I'm just saying, so I would still, depending on how much money you made, if it's more than unemployment, which is about 20, I guess without the state help, $600 a week is not much. If you made more than that, then you're probably better suited for the PPP program, because 1099 workers, once it gets refilled, can apply directly for that, because you're your own business. So a 1099 contractor can get 8 weeks of support through the PPP program, but you can't double dip. So if you're getting unemployment, you can't receive the PPP program. You can't pay yourself and get unemployment. So you can apply for the PPP and pay yourself for at least those 8 weeks once you receive the funds. But you can be on unemployment up until that point and then repay yourself and then go back off. That's where it gets, you just can't double dip is the only issue.
Right. Wow, that's really interesting. This has been super helpful. I'm sure I'll have more questions. I'm going to re-listen to this. So I'll email you.
No problem. Anybody else have a question? So I will tell you guys one other question that I was asked last time that I thought was a really good question, which was, okay, I'm a 1099 or I'm self-employed and I'm just now applying for the PPP. How do I calculate my wages? And how do I calculate forgiveness? Because, what they're The only thing they can go off of for individually, 1099s and self-employed is a Schedule C. So what they need to do is take your Schedule C, divide by 12, and multiply by 2.5 for the PPP program, right? Because that's your average earnings as a 1099 worker that was self-employed. Well, the problem with that, if you hadn't filed your 2019 taxes yet, is you don't have a Schedule C for 2019. So the question I got was, well, should I go by my 2018 return? And the answer is actually, we got guidance on this. The answer is no. You need to do a pro forma 2019 Schedule C. So that means that you take your gross revenue from your 1099s and the money that you did receive for your gross that would go on your Schedule C, and then you would come up with all the expenses and put that in a pro forma, a guess, even if it's a guesstimate, that's okay, on the Schedule C. For folks that made over $100,000, it doesn't matter because everything above that amount gets excluded anyway. So any pro forma, you don't have to be all that accurate, right? Because the excess earnings is going to be excluded, and you just take that 100,000, you divide by 12, multiply by 2.5, that gets you to $8,333. I believe I did the math right on that. And then you think of 8 weeks. Well, that's that 100,000 divided by 52 multiplied by 8. That gets you to right around, the 16,000 something. I don't remember exactly what it is. The 8,333 is the monthly. Multiply that by 2.5. That gets you a little over 20 grand. So anyway, that 16,000 approximately of earnings is what would be forgivable for a 1099 person making over 100,000. If you made less, you have to be a little more careful in your estimate on your pro forma. The best practice is to go ahead and just file your 2019 so that you'll have your true Schedule C to do all the calculations off of, and then you'll have no problems. If you guess and you guess wrong, we don't really have guidance yet. What are they going to do to true it up? It may just be in the forgiveness component. It may be that you're forced to repay whatever overage, right? If you guessed under, well, you just didn't get enough of the money because you can't get an additional PPP loan. So again, the best practice would be go ahead and file. You don't have to pay in, by the way, when you file, because you say, hey, it's not due until July 15th. I didn't say you had to pay it. I just said file, so you got that Schedule C and you got the actual number with which to apply. I hope that's helpful for anybody out there who has 1099 income. And if you have both W-2 income or 1099 income, along with maybe your own business, like you're a statutory W-2, or you're a realtor, or you're a doctor with multiple 1099s, and you have different Schedule Cs. There's different methods out there. There are people that say, hey, for your practice, for your business, if you have an LLC, file for the business, file separately for yourself. And that seems to be fine. There's some folks that said, hey, go ahead and just give the documentation and include it all into your LLC, even though you don't file it exactly that way. I think the doing 2 applications is the better guidance, but both have been getting approved and paid. And I don't know that the government's going to penalize somebody for having 2 that got to the exact same number as 1, or 1 that got to the exact same number as 2. What they really care about is that the money went to the right amounts and that the calculations are done correctly. So that's the best information we have to date on that, because again, forgiveness, all the individual contractor stuff just came out on guidance early this week, on the 13th, on Monday, and guidance on forgiveness has not come out yet. So we're still kind of a little bit making it up as we go, with getting guidance kind of piecemealed out to us from the Treasury Department and SBA. I'll give 1 quick minute of silence for any more questions that you guys think of. Otherwise, I'll wrap us up and tell you kind of what the next steps are and what you'll expect to receive from us. Anybody else got a question, though, before I do that? All right, quiet group. Well, so I appreciate everyone joining us today. Special thank you to all of our clients and for folks who referred people to this viewing. Even for those who you say, man, I didn't see my friend jump on, I invited them. Well, anyone who registered will still receive the recording from us. along with in the follow-up email. So though all of you will get the recording along with the resource package that we referred to. So feel free to look that over. If you've got specific questions, at the bottom of that follow-up email is all of our team's direct contact information and a link to their calendar so you can book a call directly with them. That's the best way to get some of your specific questions answered, or just book directly with one of our team members. And their pictures and stuff are down below. You probably met our group through one of those folks, so just book directly with them and we'll get you whatever your specific questions are answered. Maybe you just didn't want to ask those in a public setting with a bunch of people listening, and that's okay. I totally get it. We always get some emails afterwards when we do these webinars. So thank you for the time and joining us on a Friday afternoon. I know you can do a lot of other things. So thank you guys so much. And with that, I'll just reiterate to stay healthy, stay safe, and we appreciate you and hopefully look forward to meeting you in person and shaking your hand once all this stuff is over. All right. Thank you guys.